Hello everyone. Hope you all are safe and healthy during these difficult days. Anyway, we thought of doing a presentation on tax planning. Now this presentation is also on tax planning, but we did a tax planning presentation where we explained the tax planning approach. We explained our model for tax planning and the benefits, the way of approach, everything we explained, the knowledge or the initial prerequisites and everything we explained in our first video. You can simply watch our first video via YouTube. And this video, we are trying to explain the qualitative factors that should be within the tax planning team. So because we saw in most of the tax planning strategies or even other planning teams, we saw this the lacking of certain important concerns, right? So let me get into the presentation. So I named this as silver lining, smart tax plan, because now you are maybe during these couple of years, you would have surrounded by so many dark clouds, economic downturns, losing of jobs, right? Business downturns, and so many things, you see. But you know, there's a traditional saying in every dark cloud, there is a silver lining, no? So therefore, we'll try to find out the silver lining. So as I mentioned earlier, we'll see the qualitative factors that should be there in the tax planning team, right? Before that, now during last couple of maybe years, especially due to COVID, the business environment has been significantly changed, and in fact, it is continuing to change. Where you operate your business, pandemic situation is the most important thing, and it has changed a lot in the business environment. Secondly, business model. So you see your business model, surely it would have changed. You may be working from home. You may be earlier you would have engaged in import and selling. Now you may be into a local manufacturing, right? Early days your delivery system may be a manual one. Now you may be fully automated delivering company. So likewise, your business model, in most of the cases, yes, business models are also changed. Thirdly, importantly, the legal framework that has also been changed, and towards in certain cases towards the as a threat. I mean, it's as a restriction, and certain cases as a relief. Like if you go to a foreign exchange, yeah, there are restrictions. But whereas if you go to Inland Revenue Act, you will find a lot of tax concessions, like concessional rates, exemptions, double deductions, likewise. So if you take all these changes together, you will have to reassess your planning strategies and compliance requirements, of course, because now when your environment change, yes, you will have to see your strategies. When your business model change, you will have to see your strategies and compliance requirements, because it might vary because of these vital changes, and also especially due to the changes in legal framework. Now, so there are, I mean, especially due to legal framework, because the Inland Revenue Act, if you go and see, out of the total amendments, it's around 71 pages. majority are concessions. So therefore, it is always, this is the right time, because Act is also passed, right time to do a comprehensive study on your tax planning area, especially, right? So let's see what are those qualitative factors that should be within the tax planning team. First thing, knowledge, experience, and expertise. In most of the tax planning team, of course, yes, team in the sense I'm here, team refers to firstly CFO, secondly tax expert, and rest of the team, which could include marketeers, production people, production manager, distribution managers, the other staff, other corporate managers, right? But four critical things: knowledge and expertise on macroeconomic. You need not to be an economist, but to be a tax planning guy, or rather to hold a seat in the tax planning team, you should have a fair amount of understanding of the macroeconomic fundamentals, variables. Secondly, and importantly, business model and structures, because the team should have a thorough understanding of the business and business structures, transactions, the way of handling things, right? And intentions of the owners, shareholders, practices, and other qualities that they are maintaining. All that counts. That's a fair amount of understanding on business model and structures. And then legal framework, laws and regulations. Of course, to plan on income tax, you need a better, very technical understanding of income tax law. If you are planning on VAT, yes, VAT. Because VAT is not something that you can straight away, you can't call it planning, but you can do your transaction, which could reduce income tax as well as value-added tax. And thirdly, finally, ethical framework. Now, this whole planning process needs reasonable involvement of ethics, maybe business, maybe professional, because otherwise it could lead into tax frauds, evasions. So you should make sure that your planning is not heading towards a fraud or a tax evasion, right? That is first thing, that is knowledge. Secondly, the big picture. Now, planning team need an understanding of the big picture, not the small components of the company. You should first know the big picture and how it behaves when you change one particular aspect, how it results, and all that. But of course, you can have a big picture only when you study the case. You should go through the transaction. You should speak to the managers, and you should understand the entire big picture and visualize this. So when you visualize, you have everything in mind. Everything in the sense, the big picture. That is first thing. Second, the eagle eye. Now, first you have the big picture, and secondly, you have an eagle eye. When you have an eagle eye, you can see the things clearly, and you will understand each and every component of the big picture, right? You know A to Z, everything clearly, crystal clearly, right? That is the second thing. Blindly, you can't do this. The big picture and components should be very clearly defined and understood before the planning process starts. Next, conscious listening. Now, you can go through articles, you can go through financial statements, etc., etc. But for the planning, what is most important for me is listening, because uh, the corporate managers, owners of a company knows much better than you of their business, because they will explain how it works, how it change, right? If you were to change, how to change, when to change, what factors to be considered, and they are masters of their business. So therefore, we should listen to corporate managers and corporate leaders, right? Then that will help immensely your planning process. Next, beyond numbers and letters. This is very important because most of the tax planning teams, they are so keen, so focused on financial statements and taxing statutes. I mean, in certain cases, they are even not bothered about the business structures, group structures, uh, and things like that. Rather, they are so attached to, so concerned about these two instruments. Of course, you need a better, much better understanding and reading on these two things, which plays a vital role there. But it should be more than that. You should go beyond that. You should go beyond that, because the big you should have an understanding of the big picture and understanding of each and every component of your business, right? Of the business in front of you. So always the planning team should try to go beyond the numbers and letters. Next, different viewpoints. Now, that's again a lacking area, because always either CFO or the tax expert is trying to impose their own planning strategies into the system, which in most of the cases fail. So therefore, you should listen to other corporate managers and leaders of your organization. Maybe you are maybe listening to marketing manager, maybe to production manager, maybe to legal officer, because their viewpoints has a merit. As an example, if you are currently into import and selling of pharmaceuticals, you would simply, which is liable for taxes, income tax at the rate of 24%, you can simply suggest the management to introduce a small process and try to establish that you are into manufacturing. Let's say you import pharmaceutical and do some alterations and pack it and sell. Now you can simply say, and yes, it is kind of a manufacturing, the process. Therefore, you would claim the income tax rate of 18%, 6% saving on your profits. So that's a good strategy. But if you go and talk to the legal office of the company, you will understand that it is not allowed, it is prohibited, because if you are into import and selling of pharmaceuticals, you can't do your own alterations to the products import, right? So I'm just citing this to show you the importance of the involvement of other professionals, other corporate leaders and corporate managers within your organization. That is different viewpoints. Next, integrated thinking. So integrated thinking, now you from in your process, you will be gathering information, documents, thoughts, everything now in your basket, tax planning team's basket. Now, how you are going to integrate? You have to have a conscious and a super brain to integrate this. This is the critical point. You can simply gather information and keep it with you. Sometimes some information are not used in certain cases, right? Now, here is the critical point, how you are going to integrate the knowledge you gathered from financial statements, tax incentives, and then from the marketing managers, and from visiting the manufacturing process. Now you have everything with you. With that, what you are going to do is the question. So that's why I mentioned you need a super brain to integrate all this gathered information. So integrated thinking, so which will help, I mean, all these thought processes of the team should be directed towards one, right? Then only it will become one thought process, one process, and give you the desired objective. Substantiate. Substantiate. If you see it explaining strategies implemented in a country like us, most of the tax planning strategies implemented and cannot be a substantive because lack of information, lack of documents, lack of clarity, lack of business rationale. Now, as an example, when the Internal Department queries on an exemption you claim, you don't know exactly the basis, the clarities, on what basis you started this business, right? Why you claim this? Have you satisfied, right? And in say, if it is an investment based this thing, your project proposals, your valuations, your analysis, evaluations, management approval, board approval, you need to be there. They need to be there, because then only you can substantiate your business rationale, your claim. Otherwise, those can be simply ignored by the Commissioner General as an tax planning prohibited, because there are some tax planning, even some tax planning are prohibited under the new Internal Act. If you do anything with sole or dominant purpose of reducing taxes, the Commissioner General has the powers to disregard those activities. So substantive is very vital. Then sustainability, the next area. If once it is implemented, the strategy, you should keep a close and continuous eye on these implemented strategies. Otherwise, it can't continue for a long period, because you may be doing something else after the implementation of the strategy. You should make sure that what is implemented is continuing. Otherwise, your papers, accounts, tax returns will disclose one thing. You may be doing something totally different in the real world. So therefore, it is the responsibility mainly on the CFO as well as on the tax consultant to see whether the implemented planning and your business are in line. If not, the corrections need to be made. Right? That is sustainability. So we have a great team of tax experts as well as assurance professionals. So we can of course help you in the area of tax planning. And also now these videos we are doing, we Dasanaik Associates, we are doing for the benefit of the corporates and professionals, because for everyone, this is kind of a struggling time. So we hope this video can help at least 1%, 0.1% to fuel your business, to fuel your profession. So if anything, you can contact us. We can help you all at any point of time. So thank you very much for watching this video. And as usual, we will be meeting you all with another similar video, which is going to be again very useful one. because why we say useful, we receive the comments from the professionals, business community. So therefore, we know for sure that these are very important for those who are listening. So thank you very much. Stay safe and stay blessed. Thank you.